Peter Schiff, senior economist and chief market strategist of Euro Pacific Capital, joins me today to talk about election outcomes and the investment implications for either party's win. Peter, let's start with your outlook here. How do you feel about the elections going in? We're only 2 weeks away.
Well, I don't feel good about the election at all. I think the outcome is going to be a Biden win. And I also think it's more likely than not that the Democrats will take the Senate as well, giving them control of both houses of Congress and the White House. And, as reckless as the Republicans have been with borrowing and spending, I expect the Democrats to be even worse. And unfortunately, unlike when Obama was president and you had some pushback by the Tea Party in the Republicans to kind of rein in Obama and keep him from borrowing and spending as much as he would have liked, that opposition is not going to exist anymore. Basically, the Tea Party is dead. Trump helped kill it. And so there are no fiscal, responsible Republicans. So it's just going to be massive deficit spending, which means massive money printing to finance it, which is inflation. They call it quantitative easing, but it's going to feel a lot more like inflation, especially when it comes to consumer prices, which have been somewhat under control recently. But I think they're going to run out of control after Biden comes to the White House.
Okay, we're going to talk about strategic changes in the economy just in a bit. But going back to your forecast here, what are you basing this Biden win on? Is it just the polls? Because remember last time, 2016, Trump wasn't leading the polls in the entire way.
Yeah, I thought the polls were underestimating Trump's support back then, and nobody expected Trump to win. And I kind of thought that an upset was possible, in fact, probable. But now Trump is even further behind than he was back then. And, I don't think it's the same dynamic. Trump was an unknown quantity back then. I think a lot of people were willing to take a chance on somebody who promised to drain the swamp and make America great again. Neither of those promises were kept by the president. I mean, he pretends that he kept them, but he hasn't. In fact, the signature issue that he ran on was the trade deficit. He was going to make America great again by reducing our trade deficits. We were losing on trade. That was the result of incompetent trade deals negotiated by his predecessors. Well, last week, we reported the single largest monthly trade deficit in goods in the history of the country. Our trade deficits with China have never been bigger. Our trade deficits with Mexico have never been bigger. So if we were losing on trade before Trump was elected, we're losing even bigger since he's been elected. So the budget deficits are out of control. The trade deficits are out of control. Government is bigger than ever, spending more than ever, borrowing more than ever. The Federal Reserve is printing more than ever. We are further away from greatness than we've ever been. So I just don't see a lot of the people who took a shot on an unknown quantity repeating that. I think more people now are going to vote Biden if they want change, even though clearly Biden doesn't represent change. He represents a continuation of the failed policies. But Trump isn't change either because he's the incumbent. So I think when times are bad and voters are frustrated, the tendency is to throw the bums out, even if it means putting another bum in.
Yeah, you mentioned trade deficit with China. Right before you, I spoke with another economist, and he said that even if Biden wins, the Democrats are going to change fundamentally the relationship with the Chinese, and we're still going to have more or less a trade war going on. What do you think?
Well, we lose any trade war because we're unarmed. I mean, we are the losers in any war. So I don't think that Biden will necessarily continue the rhetoric the way Trump has, and maybe he'll even lower the tariffs because, of course, the tariffs fall more heavily on the middle class. Biden would rather tax the rich than the middle class, which is, what the tariffs hit. Although taxes on the rich end up affecting the middle class dramatically because it weakens the economy and destroys employment opportunities that might otherwise benefit the middle class. But I do believe that ultimately it's going to be the Chinese that pull the plug out, on the U.S. economy. I think the Chinese currency, along with many other currencies, are going to rise sharply against the dollar in a Biden administration. And that will bring down our trade deficits because everything we import will be so expensive, we won't be able to afford to import as much of it. But we're not going to produce the stuff either. We can't do that. So it's going to be simply Americans getting used to going without things. So a lot of the products that Americans buy now and take for granted, in the near future, they will have to do without those things because they won't be able to afford them.
How much of the trade deficit was due to the recession from this year, or was it a continuation of a longer-term trend that happened before COVID?
No, well, the recession would have shrunk the trade deficit. The problem was the stimulus that we got. So even as Americans worked less, they didn't reduce their spending because the government just printed money and gave it to them. So Americans took those stimulus checks and bought more imported products. So because of the stimulus, our trade deficits got bigger. A recession would have helped bring the trade deficits down, which would have been a good thing. But that was interrupted by government policy. And so now the problems are much worse because of what the government did. And if we get any more stimulus, it's going to have the same effect. The trade deficit is going to get larger and larger.
Let's talk about a Democrat win now. What would happen to legislation that would impact the investment landscape? We're talking about taxes, foreign policy, infrastructure spending, stimulus, all that stuff. What are the major changes that you as an investor are going to be watching out for?
Well, there's no question that a Biden win, particularly with the Democrats controlling both houses of Congress, taxes are headed up dramatically on corporations, not just the tax at the corporate level, right? The official corporate tax, but the tax that the owners of corporations have to pay on their dividends or capital gains is also going up sharply. So you're talking about a dramatic, maybe even unprecedented increase in the taxation of corporate earnings, which is going to have a dramatic impact on the value of companies because a corporation is simply the present value of its future after-tax earnings. And if those after-tax earnings are diminished dramatically by well over 50% by the increase in the double taxation on corporations, then stocks, all else being equal, have to fall precipitously in value. The only factor that will prevent that will be that the economy is also so much weaker under Biden than it would be under Trump. And I think it would be weak either way, but I think it'll be weaker under Biden. That will mean the stimulus that we get under Biden will be even greater. So the Fed's going to print even more money. We're going to borrow even more money. And so the stock market is looking positively at that. Now, none of this is going to help the economy. Stimulus is just going to raise the cost of living. It may push up asset prices, but I'm not even sure that's going to happen. I think a lot of people who are betting on that may be disappointed. It may not work this time. The only prices that get stimulated by the inflation the Fed creates could be, consumer prices. It could be the supermarket where you see the impact of all the Fed policy, not in the stock market.
Let's talk about the stock market now. If we were to assume that Biden is going to win, and if we were to assume again that you're right and we're going to see a lot less, a lot more taxes, why are markets still so high? Why aren't we seeing a sell-off and pricing in the increase in taxes and decrease in valuations as a result?
Yeah, that's the point I was making. Earlier in the year, I expected the markets to eventually sell off to price in a Biden victory. I thought the markets were missing the fact that Biden was likely to win. But now that they've accepted that and are discounting it into the market's not selling off because investors perceive a Biden victory as being a positive. If you look at the way the markets have been reacting to bad news is good news. Why is bad news on the economy good? Because it means we get more stimulus, we get more money printing. That is the only thing that's driving the stock market. So they're looking at the bad news of a Biden win as being good for the stock market, not because it's good for corporate earnings. It's not. Corporate earnings are going to get crushed under Biden. What the markets care more about is the stimulus. The stimulus trumps the earnings. In other words, I don't even think earnings matter in this market anymore. Earnings are irrelevant. All that counts is how much money the Fed is printing, How big is the Fed's balance sheet? How low are they going to keep interest rates? And for how long are they going to keep them there? So the markets are looking at how awful the economy is going to be under Biden. And they're like, this is great news. The Fed's going to be at zero forever. Money is going to be dropping from helicopters, right? So stocks are going to go up in the horrible economy that will be the consequence of the Biden victory.
So you're not expecting markets to move drastically in either direction following, let's say, a Biden victory. Jerome Powell has basically indicated he's run out of ammo. What happens next?
Well, look, if anything, I think the market will sell off. I think it might be the opposite of what happened when Trump won. Remember, when Trump won, initially the markets tanked in the first few hours that the S&P was trading after hours. But then by the morning, we had completely reversed and we had a big rally. And that's because everybody was convinced a Trump victory, if it happened, would be terrible for the markets. Now, I never bought into that. It didn't make any sense to me because Trump was promising lower taxes and less regulation. None of that is bad for the market. So I think investors figured that out early on, that the Trump win was actually good. Now you have the situation where people think a Biden victory is good for the market because it's going to deliver more stimulus. I think that's wrong. So maybe if Biden wins, we get an initial rise in the market, potentially, but then an immediate decline, or maybe the market will just sell off right away. Because in my opinion, there is nothing bullish about a Biden victory. I don't think the money printing and the deficit spending is going to be enough to compensate for the weaker earnings in a, or lower earnings in a weaker economy. And I think the market is already so overvalued, right, from past stimulus that I don't think the future stimulus, even if it's bigger, is going to have anywhere near that impact. So I think we could get a big drop in the market. Eventually, we may get another rally because there's so much inflation that the price of everything really starts to go up. And so that would include stock prices as well. But I expect the cost of living to far outpace the gains in the stock market.
What's going to happen to the dollar then, Peter? Because if, let's say, the Democrats win, you get more stimulus, even more than now. Shouldn't that be driving up the dollar?
No, the stimulus is bad for the dollar. By definition, the stimulus increases the supply of dollars. So if there's more dollars, they have less value. Plus, the stimulus also rewards people for not working. It keeps people unemployed and unproductive. That's really what it's designed to do. The stimulus actually prevents a real recovery from happening. We get a phony recovery instead of a real recovery. And that's bad for the dollar, because what happens is instead of producing more goods and services, we just print more money. And now the Americans take that new money and they go abroad to spend it. And so we're dramatically increasing the global supply of dollars. And so I think once the dollar starts to fall, it's going to turn into a free fall. That is the crisis that's coming. It's not going to be a financial crisis. It's going to be something so much worse than that. It's going to be a US dollar crisis, which means it's also going to be a sovereign debt crisis. US Treasury bonds are going to be right in the crosshairs. And of course, if Treasury bonds are collapsing, so are all bonds, right? All US dollar denominated bonds. And we're a country that runs on debt. Everybody is borrowing. And if nobody wants to lend us money anymore, if the Fed is not the lender of last resort, but the lender of only resort, then this whole house of cards economy is going to come collapsing down all around Joe Biden.
You and I have talked several times, and you've brought up this concept of the collapse of the dollar coming up in the economy. But the reality is, Peter, right now, the dollar is still the de facto currency of the world. Do you see another currency in the future replacing its status?
No, I don't see any currency replacing the dollar. I see gold replacing the dollar. I mean, the dollar replaced gold. So now gold's going to replace the dollar. And the only reason that the dollar replaced gold was because we claimed it was as good as gold, because not only did we back the dollar by gold, but we were willing to give people who had dollars gold on demand. You could freely exchange your paper dollars for a fixed quantity of gold. So that doesn't exist anymore, nor does the U.S. enjoy the same financial position that it had when the dollar was accepted as the reserve currency. Back then, America had the world's biggest trade surplus. Now we have the world's biggest trade deficit. Back then, America was the world's largest creditor nation. Now, America is not only the world's largest debtor nation, but we have more debt than all the other debtor nations of the world combined. So America is a shadow of what it used to be. There is no way that America today would ever have been awarded reserve currency status. The only reason we still have it is because the world has been reluctant to change, because they've been worried about the short-term implications of that. But in the meantime, because the world has allowed us to abuse this privilege, we have run up debts far greater than what we ever could have run up had the world imposed some discipline sooner. But now, I mean, they're not going to wait forever. I think this COVID situation and what we're doing now is a real wake-up call that the dollar's days as the reserve currency are over. But the world is not going to anoint another fiat currency to replace the dethroned dollar, right? They're not going to say, hey, let's make the euro the reserve currency, or the yen, or the Chinese RMB. The world's just going to go back to gold. Central banks already hold gold, right? It's there. So all they have to do is increase their ownership of gold to replace the lost value of the dollar. And a lot of the transition is going to take place in the market. When the price of gold moves up, right now it's around 1,900. When it goes up to 10,000, 15,000, 20,000, that means by default, the reserves that central banks have, now their percentage of gold reserves is going to increase, because the gold that they hold is going to be a lot more valuable relative to the other currencies that they have in a reserve. The problem is going to be a lot of these Asian central banks that barely have any gold. They really need to start buying gold now as much as they can in anticipation of this transition back to a real monetary system based on real money, gold, to replace the phony system that we have now that has given us these bubble economies and all these imbalances, and that really has been responsible for all the major financial problems that we've experienced.
Sure, that's more long-term, but in the immediate term, how do you think prices of gold are going to react to a Biden victory? As you remember, in 2016, we had a month of dollar strength and gold weakness following Trump's win in 2016. All throughout November, gold sold off. What do you think is going to happen this time?
Yeah, well, gold's done extremely well under President Trump. In fact, gold's done better under Trump than it did under Obama. But I think gold could shine even brighter under Biden. I think that initial reaction when Trump was elected, gold sold off because people thought, hey, Trump's going to reduce our trade deficit. It's going to strengthen the dollar. We're going to have a bit better economy. He's going to pay down the national debt. None of that happened. All of the good news that was weighing down gold turned out to have been a false rumor. But now, nobody is going to believe that any of that's going to happen under Biden. Biden is clear. He wants bigger government. He wants larger deficits. He wants to increase taxes on the productive people in the economy and increase subsidies on the unproductive. So the economy is going to be far weaker under Biden. Everybody can see that. The deficits are going to be much bigger. The Fed's going to be printing a lot more money. That is very bullish for gold.
Sure. The other thing that investors want to know is whether or not we're going to get a stimulus package before the election, or maybe even shortly after. Why do you think there's such a gridlock right now? Why do you think House Speaker Nancy Pelosi is trying to counteract Trump's targeted relief program?
Well, first of all, none of this is actually stimulus. Everything they're doing actually sedates the economy. It is all counterproductive. But it does make people feel better in the short run when they get the money, as long as they can spend it and foreigners are willing to accept it. It's like if you're a drug addict and you start coming off your high, yeah, if you get some more drugs, you'll feel a little better. It would be better if you didn't take the drugs and then went through, rehab and went through, the transition so that you detox. But if you get more drugs, even though that's bad for you in the long run, it can make you feel good in the short run. That's all the stimulus does. It allows people to spend more money that they don't have, to buy things they can't afford. But in order to make that possible, we have to go deeper into debt. We have to print more money. We have to make the underlying economic problems worse in order to alleviate some of the short-term pain. The trade-off, though, is that we get even more pain in the long run. So that is the negative consequence of today's stimulus. It's tomorrow's sedative, right? We have to deal with not only the problems that we had before the stimulus, but the additional problems created by the stimulus.
But more small businesses are going bankrupt. You yourself tweeted this today. And so just going off your example, your analogy here, the drug addict, if we don't get a hit right now, they're just going to die off, right? Wouldn't you agree?
Well, a lot of those businesses are going to go bankrupt. Better they go bankrupt now than later with even more debt. But what the government should be looking at is what are the things that we can actually do to maybe help these companies? Because just, doling out money doesn't do it. What they should do is look at, hey, what regulations can we get rid of, right? That are making these businesses less productive, that are running up their costs, right? Maybe we could find regulations that we don't really need and we can remove them and lift that burden from these companies. Maybe we can lower the taxes that they're paying. But in order to do that, we have to cut government spending, because you can't really cut taxes unless you make government less expensive, because taxes pay for government. And if you cut taxes without cutting government like Donald Trump does, then you have to find another way to pay for government. And Trump chose inflation. Let's just print money and pay for it that way. But that's more expensive than paying for it through taxation. But the bottom line is we have a very weak economy. A lot of these companies need to go out of business. It's the unfortunate truth. Keeping them in business when they're non-profitable simply delays the day of reckoning and prevents the resources from being reallocated in a way that would be viable. And if you have a business that's not making money, you need to free up the land, labor, and capital to some other entrepreneur who may be able to combine those resources in such a way as to actually generate a profit. Because the profit is a signal from the market that you are adding value. A loss means that you are destroying value. So why do we want to keep value destroying businesses afloat? All that means is they will destroy even more value. We want to stop the destruction so that we can have creation.
Yeah. Finally, Peter, what's the message you have for investors going in to the election? I know you've talked about gold and your outlook for the changing economic landscape should the Democrats win. What other assets do you think will do well? What do you not like? What do you like besides gold?
Well, look, I don't like the dollar. I don't like the U.S. stock and bond markets. So I think investors should be completely out of the U.S. market going into this election so that you're prepared for the results. I mean, I think either way, the dollar's going down, gold's going up. I think gold will go up more and the dollar down more with a Biden victory than a Trump victory. But I think either way, you want to own gold and not be in the dollar. And I think that foreign stock markets and emerging markets will dramatically outperform U.S. stocks during a Biden presidency. And so I think you want to own those stocks going into this election.
Okay, you heard it first from Peter Schiff. Peter, I want to thank you so much for coming on the show today with your thoughts. Appreciate it.
Sure thing. And looking forward to seeing everybody at the virtual New Orleans conference later this week.
It's going to be great. You're going to be presenting, right? Any teasers and what you're going to be talking?
I'm saying some of the things we talked about now, but I've got a workshop that I really focus on our investment strategies at Europe Pacific Capital. So make sure I've already recorded the workshop, I think yesterday. And so once the conference goes live, you can just go to my booth, I think, and listen to my 40-minute workshop. In addition to my keynote, I also am on a panel, and those discussions are going to be live. So make sure you watch those live, but you can watch my workshop anytime you want, and then visit our website, speak to one of my brokers about fully positioning yourself, getting prepared for this election, right? Because I think you can vote, but your vote's not really going to make much of a difference. You're going to be outvoted by somebody else, unless maybe you're in one of these swing states. Maybe you have a chance of making a difference. But most states, it's a foregone conclusion who's going to win. But the important thing is being prepared for the outcome. And so make sure and do that because that's going to be the most important aspect of this election, that you get prepared. And by being prepared, that means out of U.S. stocks and bonds, out of dollars, and into the assets that will do well when the U.S. economy does not.
And where can people learn more about your work outside of the conference? I know you have a podcast, which I personally watch. Great show, by the way.
Yeah, my podcast, the Peter Schiff Show podcast, I do 2 to 3 episodes a week in general. You can listen to them at schiffradio.com, any place that has podcasts like iTunes. You can also watch them on my YouTube channel, The Schiff Report. Getting close to 400,000 subscribers to my YouTube channel, so that's good. My Twitter, I'm almost at 300,000. I'm within 1,000 now with 300,000 Twitter followers. So you can follow me on Twitter, Facebook, Instagram is one of my newest social media platforms. So we're putting out a lot of good content on Instagram. So make sure and follow me there as well.
Trying to get the millennial audience as well, right? That's important. People my age.
Yeah. They don't have a lot of money, unfortunately, but there are a lot of them. It's important to get them to understand economics and the economy and
what, since we're still talking, people my age don't like gold, right? They don't buy into this whole gold dogma. How do we bring them into the space?
Well, they just got to learn the history of money and the truth about money and the difference between real money and fiat money. And they're going to experience it because Americans haven't seen the type of inflation that they're about to see. So once they really see the value of their savings, if they have any, or more importantly, the value of their paychecks radically diminished, if they look at the cost of living jumping significantly, on a monthly basis, they'll experience firsthand the horrors of inflation. And that is a function of fiat money. You don't get that in a sound monetary system. And people will be able to compare what is happening to prices in terms of paper money versus what's happening to those same prices in terms of gold. Because people will see that as things are getting more expensive in dollars, they're actually getting cheaper in gold. That is the beauty of real money. Prices go down. Your cost of living goes lower over time, which means your quality of living goes up. So sound money equals, a rising living standard, and this unsound fiat money equals a falling living standard.
Fantastic, Peter. Thanks very much again. Appreciate it.
Sure.